But first, our top story goes to John Kingston as we dive in and break down some of the recent employment numbers that just came out. John, thanks so much for joining us. And what are we seeing in the latest jobs numbers?
Hot off the presses, as always. The number of truck transportation jobs reported by the Bureau of Labor Statistics this morning was 1,586,300. That is up 3,300 jobs since November. November was revised upward. October was revised upward. And the bottom line is that, we're in the middle of a freight recession, and the number of truck transportation jobs is up almost 6,000 jobs in the last 2 months. Now, let's note that that does not count somebody who was an independent owner-operator who parked that truck and went and became an employee somewhere. You really can't measure that. So we always, have to acknowledge that. So look, we're 25,000 jobs below where we were a year ago. The all-time high in this number came out in last January. It was about 1,611,000 jobs. We're about 25,000 jobs less than that. You had yellow go out in the interim. You had a freight recession in the interim. And yes, a lot of the yellow drivers found work, presumably with other LTL carriers. It didn't have to be LTL carriers. Could be anybody. And you're only down 25,000 jobs. So that's not bad. That's fairly healthy on the employment sector. But as I said, you can't really measure the number of independent operators who no longer are operating. I wanted to mention the continued kind of bloodbath in warehouses. That number is down. If you give me a second here, that number is down about 5,000 since November. It's down about 14,000 since October, and it is down about 80,000 since the all-time high. So, the warehouses are bleeding. We know this. There was a lot of capacity added during the pandemic. That capacity is not needed as much as it was before, and you're seeing that in the numbers. I wanted to add one little thing here because it's sort of mildly interesting. Rail jobs were up about 500 in the month, and that doesn't sound like much, but for rail, that's a lot in 1 month, and I really don't think I would have even noticed it, except for the fact that I went to the Rail Trends conference in New York in mid-November, right before Thanksgiving. And I've been to this conference before, and it's usually just like this incredibly depressing. It's a great conference, but it's incredibly depressing 2 days because all they talk about are all the missed opportunities in rail. This year they talked about that they actually see some opportunities, and now you've got an increase in jobs. That's by the standards of rail is a pretty big number. So that really did catch my eye.
John, I'm glad that you bring that specific little nugget up because as we were kind of wrapping up our year in review for 2023 and we did a couple Zoom-ins with some rail experts here on FreightWaves Now, everybody mentioned that point that there was a lot of optimism from not only just your class ones, but also from some of your rail shippers and some of your short line operators as well, specifically when it came to the labor side of things. We were seeing a lot more of these class ones who had cut jobs and who were really struggling to refill some of those jobs that they released during the pandemic. And now we see that reflected in the numbers, in that pull-up. Do you think that now moving into 2024, this is kind of an encouraging trend and will keep rail shippers specifically more on that optimistic side?
The outgoing STB chair, whose name escapes me now, gave his sort of annual speech. He doesn't hold back. I mean, I heard the speech last year. When I say last year, I mean 2022, and he was pretty harsh. And this year, he was a lot more optimistic, except he really ripped into Union Pacific, which had been cutting jobs. But the point is he was kind of singling out Union Pacific for cutting jobs while others weren't. So the point here is, whereas in his 2022 speech, he criticized basically all railroads for cutting too many jobs, he felt in 2023 that he really only had to criticize one of them, Union Pacific, as far as the Class 1s. So that kind of shows you that he had been seeing trends in which most companies were adding workers, but, one big company out there was cutting them. And, maybe that's why you see an increase of 500 jobs in a month.
And John, truly at large over there, of course, you've been covering so many topics from what's going on in the Red Sea, what's going on with the labor numbers, and also what's going on with diesel. You just put out an article around what's going on with the relationship between diesel and the crude market. What's going to be the latest from that point?
Well, what I talked about in the story after talking to several analysts is, the diesel spread over crude has been elevated for several years now. It averaged about, if you just took the front month numbers on the CME commodity exchange, compared Brent crude to ultra low sulfur diesel, I think it averaged in 2019 41 cents. Last year, with the war and the Russia-Ukraine war, it was over $1, and this year it's still elevated at 80 cents. And the question is this sort of permanently elevated? I talked to one analyst who said he felt that it will probably get back to normal. I won't go into the whole IMO 2020 impact on diesel, except that that does have the possibility of making it sort of more permanently elevated. One thing I did write in there about is that refinery capacity expansions are looking pretty good worldwide. And remember, it's a global market. There's no really such thing as a U.S. market, including one giant refinery in Nigeria that's coming online. So right now, most of the signs point to bearish factors, both in diesel spreads as well as oil overall. But then, of course, the big wild card is the Red Sea, is the Suez Canal. The oil market seemed to suddenly grasp that, I guess it was 2 days ago, and suddenly shot higher before dropping back a little bit. So I would say that all the outlook for this year is mostly bearish. With that, with the Red Sea exception, as how long does that last, and what kind of impact does that have on prices?
And as far as that impact right now, have we seen any immediate trickle-down effects, or are we kind of waiting for our latest post-holiday numbers coming out from the DOE that will be next week?
Well, there's really been no inventory. Now, the one big inventory number that came out that kind of blew everybody away was the second largest increase in ultra-low sulfur diesel stocks in 1 week in the last 10 years. Now, the fact is that the three biggest increases in diesel stocks at the end of the end of 1 year, the start of another, they all came at as the year was changing, which could be sort of inventory management related to taxes. It's rather complicated. So maybe on the one hand, these numbers were just a one-off that won't last. But right now we are starting to get up to kind of more normal ultra-low sulfur diesel inventories in the U.S. That's a good thing. We've been running on significantly reduced inventories now for more than a year. That's helped to keep the price up. If our inventory levels can build a little bit, boy, I'll tell you, they may be talking about a lot of snow this weekend, but still, it's pretty much been a mild winter. We're already laying the groundwork for another bust in terms of weather-related demand, and that's very good news for the diesel market, for diesel consumers.
And John, one of the things that popped up a little bit last year is how much we have in our reserves. Any idea what that's sitting at right now?
Well, I mean, if you're talking about the strategic oil reserve, the strategic petroleum reserve, I don't know the number off the top of my head. We have been building it kind of steadily and slowly to replace the more than 100 million barrels the U.S. dumped into the market as a result of the Russia-Ukraine war. We've got a long way to go. I will say that, we've talked about this before. I know there's a lot of criticism for that sale of oil into the market. My view is that is exactly what the SPR was built for. When Russia invaded Ukraine and a good chunk of the world started embargoing Russia, obviously those embargoes have mostly failed, but in the beginning they were definitely not failing. And the SPR stepped in to replace some of that. That's why we built an SPR. So, it's going to take time to rebuild, but the rebuild is going on. It is starting.
We'll keep an eye on it through your content and more. John, thank you for joining us this morning. Have a good weekend.
Thank you. You too.